Hello and welcome to Business Incorporated live on Channels Television. We'll be tracking the markets, the economy, and of course, we'll see how all that affects your pockets. Here are the stories that set your agenda. Zambia Central Bank cuts key interest rate for a second straight meeting. Next, Senegal plans $100 million onshore oil search. And the Bank of Ghana rolls out structured auction system for dollar interventions. Great to have you join us for this half hour. I am Will Ebang. Let's get a check on the commodities market, and we see oil prices. I'll start with that space. It gained as U.S.-Iran talks remain tense, and crude raws suggest stronger demand. Now, Brent rose 1.22% to about $69.64 a barrel, and we see WTI also up 1.33% to $64.81 a barrel. Now, natural gas, we see that dipping 0.06% to settle at $3.11. Now, Iran said talks with the U.S. show consensus to continue diplomacy, while President Trump considers sending a second aircraft carrier to the region. And let's check with the metals market now, see how all metals performed. Today, we see spot gold was up today 1.16%. It says silver is also up, mostly in the green, especially when we see Treasury yields. I have the U.S. jobs data climbing there. And we see that looking at spot gold, we see it up 5.24%, $84.56 per ounce. Platinum is at $2,182 per ounce. And we see palladium also up 2.5% at $1,773. And copper not doing badly at 1.19% up at $5.98. And analysts say the weaker dollar is making gold cheaper for overseas buyers, and that's supporting the higher prices we've been seeing. And now let's look at copper, but now in Africa. The Democratic Republic of Congo boosted its copper exports by nearly 10% last year, reinforcing its role as a key global producer. Now, strong demand from China also helped drive the increase, underlining the country's strategic importance in global copper supply chains. And the growth supports ongoing output gains as Congo continues to expand production and attract investments in its mining sector. Still talking about mining, and that's in 2026 South Africa. Traditional leaders at the 2026 Mining in Durban, Cape Town, says community voices must be central to mining. They warn that without proper consultation and shared benefits, projects risk tensions rather than development. Our South Africa correspondent Innocent Samosa has more.
At the 2026 Mining in Durban is one of cautious optimism. Leaders from across Africa and beyond are grappling with how the continent can attract sustainable investment while ensuring mining delivers real economic benefits locally. Meanwhile, traditional leaders say ignoring their voices often leads to conflicts, protests, shutdowns, and costly project delays.
And what I've learned so far from my work experience is you cannot start any exploration phase without engaging with communities, because at Mining in Durban we are talking about partnership. What is partnership? How you are focusing, how you are aligning your policies with, the communities, the local content.
It's a tough answer, but most times they don't. So when things go sour, as I would like to put it, that's when they come in. I would like to share an experience of the last Nigerian Mining Week, which I had 2025. A company representative came and met me and asked how I could help or how my organization could help. And at that point, like the panel discussion we talked about, most times where trusts have been broken, it's usually hard to get it back. So we talked about early inclusion and the need to ensure that you include all the necessary stakeholders before there's a break in trust.
Zola Nimkiva, Secretary General of Contralesa, says community voices matter in the mining sector.
It's very important because mining is embedded in terms of its operations in areas that are rural and areas that are under the jurisdiction of traditional leadership. And therefore, it goes without saying that the mining companies ought to work with communities and interface with traditional leaders in order for things to happen in a normal way, where there is an inclusive participation as well as meaningful participation of our community.
Meanwhile, Kenya says its vast untapped mineral resources could attract more global mining investment.
And better and sustainable findings of gold. That is just one area. The entire belt cuts across. It begins from the border of Tanzania, it cuts across all the way to the border of Ethiopia. We are exploring today. Within a very short period of time, we'll make an announcement of our findings. But grades, wonderful grades. Deposits, viable, economically viable, and sustainable. So Kenya will open up in a manner that people will not believe.
The message here is clear. When the community voices are heard, mining becomes more stable, more investable, and more genuinely developmental. A win for governments, investors, and the people who live on the land. From Cape Town, South Africa, at the 2026 Mining Indaba, Innocent Samosa, Channels Television News.
Still stay in Africa and with commodities, Senegal state-owned oil company Petrosen plans to spend $100 million this year on its own onshore oil exploration campaign, aiming to find crude in land-based fields for the first time in decades. And the move comes as Senegal has become a significant oil and gas producer. Petrosen CEO says the company hopes that onshore exploration will uncover new resources and support the country's growing energy sector. Now, more stories coming in. Zambia's central bank has cut its key interest rate to 13.5% from 14.25%, and that's marking a second straight reduction as inflation continues to ease. The cut was larger than economists expected and reflects a faster than anticipated drop in inflation, which has fallen to single digits in recent months. Despite the improvements, inflation remains above the bank's target range. And now we head to Ghana, where the Bank of Ghana has introduced a new structured auction system to guide its foreign exchange interventions, aiming for more transparency and stability in the cedi market. Under the new rules, the central bank will hold competitive dollar auctions to manage volatility without targeting a fixed exchange rate. Officials say the approach lets market forces determine rates while addressing disorderly conditions, helping Ghana's forex market function more efficiently. Now, big overall in Nigeria's debt market, we see the infrastructure being changed. The Central Bank of Nigeria says it's fully deployed a scriptless securities settlement system. That's S4 for government securities. And according to the CBN, this aims to modernize auctions, improve transparency, and will eventually cover the secondary market. And let's look at what this means for traders, investors, and the broader money market. Joining us now is Chuka Nwachukwu, Chief Dealer and Group Head of Trading at UBA. Good afternoon, Chuka. It's good to have you join us.
Good afternoon, William.
Chuka, with this official deployment of the S4, we know we had a test in November, a pilot test, and we're seeing this official statement. Do you see this new system changing how yields are going to be set at auctions?
Well, thank you very much. Yeah, it's a good development. It's quite exciting that CBN is finally coming in, directly getting involved in terms of settlement. The process itself, hasn't actually started. Like you rightly said, there was a test run sometime in November, and then banks have also been in communication with CBN. We've had a series of, trainings, and then hopefully before the end of first quarter, this will fully be deployed. In terms of the benefits for the traders, for the bank as a whole, and then of course the system as a whole, it's going to bring in a whole lot of transparency, more transparency, and then of course it will also help in terms of cost reduction, and most importantly, it helps in terms of settlement. Faster settlement, obligations between the banks, because part of the issue we have with the current system we are using, which is the QS, is the fact that most times, there are a bit of default from one counterparty to the other. So with this introduction of this CBN S4 is going to bring, faster system settlement, and then, of course, more transparency, like I said earlier.
Okay, you talked about faster system settlement. This is definitely going digital, paperless. No more paperwork in the in the books here. But is this going to change maybe how banks or maybe portfolio managers or even dealers in the market manage their liquidity, maybe system liquidity, and also maybe the bid at the treasury bills auction or maybe bond auctions?
Yeah, I think one of the major take here is the fact that all the bids will be real time, and then you get to see what is being bidded for. Of course, also is going to help improve system liquidity, because most banks, practically everybody will see what the system has to offer, as against what we have now, where you practically have to wait for system liquidity to be to be available, for you to be able to know. So on the liquidity side, especially liquidity managers, it will help to prepare you for liquidity management. It helps you in terms of projection. So for traders, it's also, for a trader, for you to be able to, chat or talk about a direction or a trade of strategy, you must be sure of your liquidity status. And so this will also help in terms of, traders being able to understand what the strategy will be. It will also help market discovery in terms of yield. Direction of the market liquidity determines what is going to happen in the market. So if market is a bit tight, then that obviously yields will will be more favorable in terms of a sell. So for us, in general practitioners, and then of course traders, I think it's a general thing it's a welcome development, and then the market is actually excited and looking forward to it.
And speaking of excitement, just paint a little picture for us here. We want to really know how this is going to be deployed, what it will really look like if the S4 moves into the secondary market, because right now we're still talking about the primary market. Could it make trading more active? Let's say maybe more volumes. Tell us how this, buyers and sellers will be matched in the system, if you have any idea about this. Chuka, are you there? Okay, I think we've lost Chika, but let's get on with what the markets are saying. Maybe we'll have Chika right back to give us more insights as to how the system, the S4 system, will be deployed for auctions. No more paperwork in the Nigerian markets. Now we're going paperless, digital, and that's what the CBN is introducing to our fixed income markets. Great development there, by the way. And let's look at the African markets. We look at equities now. We see NGX still rolling on. We still say it's got legs for more uptrend there. We see it at 177,748 at intraday. That's up more than 0.5%, 0.53%. And we see GSA in South Africa also nearly 1% up there, 0.89%, 121,963 points. Very fantastic thing that we're seeing there. So let's look at what stocks. If I want to just stay on the NGX, we know that the NGX, we have First Holdco, GTCO, Zenith Bank, UBA, and we also have Dangote Sugar and some consumer goods, other consumer goods pushing that index up there. We hope that it stays positive, and we'll see how far this rally would really go. Let's look at Egypt at intraday, how they performed. However, they were in the negative, more than 0.5%, 50,084 points. We do hope that they bounce back. We see a lot of things going on in the oil space that could be impacted in them there. And Kenya closed Tuesday's trading session in the green, up 0.56% now at 205 points. Let's look at Middle East markets and see how they perform. Major stocks in the Gulf fell in early trade today amid, the fragile U.S.-Iran negotiations, with the Dubai boss falling the most. Let's look at that index. It fell 1.18%, now at 6,691 points. And we see Abu Dhabi in that region down 0.07% at 10,643 points. Let's look at Saudi and Qatari indexes, how they fared in opposite directions. And we see the Saudi index 0.67% down at 11,139 points. And we see Qatari index at intraday, up marginally, slightly up 0.01%, also at 11,502 points. And now let's look at U.S. markets now, see how they fared in today's trading. It was quite volatile today as if traders looked ahead to the release of the delayed January jobs data and also to see what CPI data will be coming in on Friday. We see what that did to the Dow Jones Industrial Average. We see that up 0.07%, 50,305. It crossed that level, hoping to hit more record highs there. S&P 500, however, in negative territory, 0.04% down. And we see the NASDAQ futures also down 0.18%. A lot coming up out of AI concerns, AI fears, tech stocks not performing so well. But a lot of capex in terms of how these tech companies are spending on AI, and that is giving investors a lot of jitters. Possibly that's why we're seeing that red close for the NASDAQ. But let's look at Asia and see what they're doing. Are they closed the markets today, specifically after that weak retail sales data we saw in the U.S., and especially despite the AI concerns and the weak economic data, as I mentioned, we see them in the green. I think they're performing really well. They're watching China as well. We see that economic data that came out from China. That's China's GDP. We see Nikkei up. Nikkei in Japan is closed, however, for national holiday. That's the foundation's holiday, 2.28%. That was what it closed at yesterday. And we see the Kospi in South Korea up today, 1%, really signaling ongoing investor sentiment, bullish sentiment in that region. Now, Hang in China, we see that up 0.31%. And let's look at mainland China. We see that also in the green, 0.09%. And in India, we see the Nifty 50 also on the bullish run. And let's look at what's happening in Europe now. We see Chiponda Chimbelu there going to tell us what's happening in Europe markets, especially with economic data coming out of China and expected data from the US. Chip, how is it going on over there?
Well, European stocks once again little changed, but they were trading lower earlier today. And the pan-European stock 600 has recovered and is now flat. And Germany's DAX is recovering a bit slower, and it's only down around 0.2% after trading as low as 0.4% earlier in the session. And that could be linked to the fact that markets are not too far from their record highs here in Europe. But like you mentioned there are still some concerns over artificial intelligence and how it will affect some sectors. But it is, of course, worth considering that European markets are not as exposed as Wall Street, where we have a lot of tech stocks that have a bigger weighting on the markets there. Now, investors are also keeping an eye on the key U.S. jobs data for January. So we will see what happens there. And that will, of course, provide some direction for the later part of the trading session.
Especially now, just give us the insight. Heineken plans to cut about 6,000 jobs. What is that doing to shares for investors and shares of holders of that shares?
Well, in terms of that, of course, it is affecting the sector. That is something that is, of course, affecting the drink sector. So, yeah, we have seen that affect the sector. But, of course, the news about the alcohol sector is not really that new. We had some news a few weeks ago that alcohol sales were down for the industry. So it is not extremely new. It is somewhat expected. And European beverage companies have had to, of course, adapt how they are offering more, especially to the younger people who are preferring healthier options, either less alcohol or no alcohol altogether. So the sector has been under pressure, but that was, of course, not unexpected.
Turning to another topic now, we see EU lawmakers are pushing for an investigation into the Epstein case. They say the latest released files suggest potential risk of influence peddling, blackmail, and money laundering. What can you tell us about that?
Well, Will, a German government spokesperson did say that Berlin is closely watching and monitoring the evaluation of those Epstein files. And that is because there is a political side to all of this, and that we have seen that also in other European countries. But if the Epstein files unveil any criminal aspects under Germany's law, then that would be, of course, investigated by the relevant authorities here and not the government, which doesn't have any criminal investigation responsibilities. Now, elsewhere in Germany, of course, Deutsche Bank, the country's biggest lender, which was already caught up in the Epstein scandal, is, of course, in the spotlight again as a result of that file released. Now, Epstein had up to 40 accounts with Deutsche Bank, and he was a customer between 2013 and 2018. And at one point, he had a large part of his assets at Deutsche Bank, and that's, of course, what the latest release of the files show. Now, Deutsche Bank has commented on that and said its relationship with Epstein was a mistake, and that it has learned from that, and also that it also provided the support to the relevant authorities after Epstein's arrest in 2019.
Now, how's that impacting maybe investor sentiments towards Deutsche Bank and possibly the whole economy, especially being shaky at the moment?
Well, I mean, of course, this is having a big impact on Deutsche Bank's reputation, which is why we have seen the bank respond with a comment and also reassure the public as well, which of course does also include investors, that they did call. On a wider level, there has always been some concern around money laundering. Also in Germany in general, but it is something that the bank and of course the authorities are trying to work on. So obviously that is something that we have to just watch out for very carefully and see whether there is more reputational damage, at least for Deutsche Bank for sure, seeing as it was of course already implicated or at least linked to Epstein in the past.
So what more can we expect from Europe as this story continues to unfold?
Well, the case, of course, has had repercussions in Norway, France, the Baltic state, and the United Kingdom. And it is in the UK where we've really seen bigger waves or bigger repercussions as a result of this. It has left British Prime Minister Keir Starmer weakened. Now, his top aide, Morgan McSweeney, resigned this week after taking responsibility for the PM's appointment of Peter Mandelson as the UK ambassador to the United States. Now, Mandelson had to resign last year after closer links between him and Jeffrey Epstein were established, and he is now being investigated for potentially sharing British government secrets with Epstein. So we don't quite know just how much of a fallout it will be in the UK, but we have seen that there is a political crisis as a result of it, and the result is that the position of the Prime Minister Starmer, is weakened, and he does now have to shore up allies in his party, and that could, of course, also have wider economic implications because many commentators are saying that Starmer may have to move to the left of the Labour Party to maintain the support that he needs to stay on as UK Prime Minister.
And definitely, as Prime Minister is a bit shaky there. He needs more support and allies, as you mentioned. This is a developing story. We keep an eye on it, and I know you'll be watching it and definitely have you on to give us more insights and more developments going on in that space. Thank you so much, Chiponda Chimbelu, Deutsche Welle correspondent right there in Berlin.
Thanks, Will.
And now let's look at what's happening in the crypto space. What's happening? Is it red? Is it green? Oh, mostly green. We see that dip overnight. We see the big whales buying Bitcoin, and we see that dip. Bitcoin is now at $67,069, down 2.28%, and massive buyout, massive sell-offs for most stocks, most sellers in that space there. We see Ethereum is also down 2.78%. The roll is going downward. We don't know where it's going to land. We'll keep our eyes out. We'll keep watching. BNB is also down. XRP is also down. Just pockets of green, but not for the altcoins there. So Leo, USDS. We see them in the red as well, but XMR is in the green. That's a good one if you're holding that coin. Let's look at what's happening. More headlines. Hong Kong is pushing to a plan for a stable coin, and the central bank is planning to issue its first stablecoin licenses in March. And this is despite China's opposition to crypto activity. Now, experts say the move acts more as a hedge than a shift in Beijing's policy. Stablecoins now account for over half of blockchain transaction value, making them central to the crypto ecosystem, and that's according to chain analysis. And let's move on. What's happening there? South Korea is targeting crypto manipulation. South Korea's Financial Supervisory Service plans to monitor the crypto market using AI to detect suspicious trading and manipulation. So if you got AI, if you manipulate it in the market, AI is going to catch you. Now, the initiative aims to curb volatility including whale-driven swings and social media misinformation. It aligns with the Digital Asset Basic Act, promoting token disclosure, trading transparency, and stricter exchange regulation. Let's look at more what's happening in that space. We see Arkham. Arkham is shutting down an exchange due to low trading volumes, just over $600,000 in the past 2 hours. The platform launched in 2024 for crypto derivatives and later spot trading failed to attract enough activity. Now, low volume made market making and fees unsustainable, forcing the closure despite earlier expansion efforts. And that's what we have on the crypto space. And that's a wrap as well on Business Incorporated. I am Will Ibang. I'll see you same place, same time tomorrow.